Coming up on Business Incorporated today, IMF says removal of Sudan from U.S. terrorism list is a first step in debt relief. IFC partners with American Chamber of Commerce to advance female employment in Egypt. Plus, Zimbabwe's central bank to form new gold refining unit sells shares to miners. Hello and welcome to the program. I am busy at Dubai, but first we start with the markets. Numbers coming at intraday in Africa were mostly positive, and here in Nigeria, the All-Share Index maintained its positive sentiment from yesterday's close, trading 0.21% higher at about midday. The GSC index in South Africa was also in the green, up 1.87%. On the flip side, though, the market in Egypt was negative at 1.08%, while the Nairobi Stock Exchange in Kenya closed Wednesday's session down 0.5%. In the Middle East, the markets were trading with mixed sentiments. The Abu Dhabi index was 0.36% lower at intraday, while the Dubai financial market was in the green. Meanwhile, the Qatar Stock Exchange traded in the negative of 0.02%, and the Saudi Stock Exchange was up 0.35%. And in Europe, stocks opened in positive territory today as traders react to comments from the U.S. Federal Reserve that it will continue to support the economy. We'll cross over to the Frankfurt Stock Exchange, where my colleague Chelsea Delany is standing by to bring us up to speed with other developments coming from Europe this afternoon. Good afternoon, Chelsea. The euro rose to its highest level in more than 2 years today and is now up 9% in 2020. What's been driving the currency surge?
For the euro, what's really driving it is it's a number of factors. I'd say the biggest bet right now from investors investing in the euro is they do believe in the recovery of the European economy. We've seen over the past couple of months, obviously the economy is still under pressure. Now many countries are going back into lockdowns, but investors do believe that once the vaccine is rolled out in Europe, once we start to see a recovery and a reopening of the economy, that the European economy will recover quite quickly. But this does pose a problem. Currency appreciation is always a bit of a double-edged sword, and for Europe in particular, because the currency rising, on the one hand, it does give consumers a little more buying power. It does point to a general confidence in the economy, but it also will make it more difficult for European exporters. The higher currency will make their products more expensive abroad, and Europe is very export dependent. It has a lot of manufacturing dependent economies, including here in Germany. So this will eat into the growth that we're seeing in the manufacturing sector right now.
All right, Chelsea, also surging is Bitcoin, which topped $22,000 for the first time this week. Do analysts think that this rally will continue?
With Bitcoin, it's always a little bit difficult to tell what is a speculative bubble and what is a legitimate and long-term change in the value of this digital currency. So we've seen these big run-ups in Bitcoin in the past couple of years as there's been a lot of interest in it, just for that bubble to pop. But this time, analysts do think it could be different, that we could see a long-term appreciation in Bitcoin, in part because it's become much easier to buy and trade Bitcoin. So apps now trade it. You can use electronic platforms. So we've seen more people trading it through that. But we've also seen a number of big investment firms, banks, hedge funds, these sort of professional investors are starting to get into Bitcoin as well. And this all comes amid more and more fears of inflation as central banks really flood the markets with this liquidity and stimulus. That's raised these concerns of inflation. And Bitcoin has been one of the places where investors are seeking safe havens. So there's a lot working in Bitcoin's favor right now.
All right, and finally, Chelsea, the UK has laid out plans to entice European investors to keep trading in London after Brexit, but many trading firms have already started to move operations to Europe. So will the UK's plan work?
I'd say to some degree, the shift of assets and the shift of investment from London to continental Europe has already happened. This has been happening for over a year now. As firms in the UK have been preparing for Brexit, we've seen banks moving staffers here to continental Europe, including Frankfurt, which has seen quite a large increase in jobs because of that. We've also seen asset managers taking money out of London to move to Europe as well. And this comes amid a lot of concerns about what the trading and financial relationship will look like between London, the UK, and the EU afterwards. There's still not a lot of clarity on what will be allowed and whether investors in the EU will be able to access UK markets and vice versa. So some of that has already happened. What the UK is now trying to do is keep some of these big trades coming through London and by the way they're doing that is to ease regulations for European companies that are now listed in London. So they want to allow EU companies to remain listed in London. They want to allow EU companies to continue being traded there. And so they say they're going to lower some of the transparency, some of the regulatory requirements so that can happen. But I'd say the Brexit has dealt quite a blow to London's reputation as a financial center.
Thank you, Chelsea. We'll see you again tomorrow. Right, let's cross over now to London, where Juliana Olayinka is standing by to tell us more, especially about the latest regarding COVID restrictions. Good afternoon, Juliana. Health Secretary Matt Hancock has given an update on the review of the tier system. What did he say?
Well, what he said, what he's still saying, because he's still speaking to lawmakers in the House of Commons, is basically that we are seeing a rise of COVID cases across the globe, no less than French President Emmanuel Macron, who was just tested positive for COVID-19. So unfortunately, as was to be expected, there are more regions across the whole of England that will now be lifted into Tier 3 from Tier 2. Just very briefly, I'll mention some of them, which include Bedfordshire, Buckinghamshire, Berkshire, Hertfordshire, Surrey, with the exemption of Waverley, and parts of East Sussex. London, of course, joins that, although London was put into Tier 3 restrictions earlier this week. The Mayor of London and health officials couldn't wait until today because the surge was rising immensely. And that was really the theme of Matt Hancock, the Health Secretary's statement. This is the last hurrah, as they would call it, before even the MPs break for Christmas holidays. And although we've had the pretty exciting news across the world that we have this COVID-19 vaccine, the Pfizer-BioNTech inoculation has been ongoing for a couple of weeks up and down Britain, but COVID cases are still significantly rising. There are 18,000 people with COVID-19 symptoms in hospitals. Anybody who has known somebody or who has experienced COVID themselves will know that if you're in hospital, then it's pretty serious. And yesterday we had 25,000 positive COVID cases and over 600 deaths. So we're definitely not in the clear here in the UK. We spoke this morning, didn't we, Bissy, about Christmas, and that was another topic of discussion. Matt Hancock's opposition member did say, you know, is Britain and England really going to be serious about allowing a mixture of households over the next 5 days, considering cases are still rising? He was pretty blunt with his message, saying that they don't want to ruin Christmas. They have asked people to use their common sense, and if they can, they should reduce the amount of people that they're seeing over this period. But still very, very worrying. And unfortunately, the majority of people living in England will be under some sort of severe lockdown. Tier 3 meaning the hospitality sector has been completely shut down.
All right, now let's talk about economic optimism and the hopes of a Brexit deal, which, of course, put shares higher in London in early trading. The pound also hit a new 31-month high against the US dollar this morning. Is that still the case at this time?
Well, yes and no. The FTSE is on the back front. It had some gains at early trading, but because we are seeing a surge in the pound, that typically pulls down the kind of internationally focused FTSE blue chip companies. The FTSE all share is down 0.08%. The FTSE 100 is down 0.09%. And the FTSE 250 slightly up by 0.02%. In the currencies market, the British pound, as you said, is up against the US dollar by 0.54%, up against the euro by 0.32%. and up against the Japanese yen by 0.24%. As mentioned earlier, the Bank of England Monetary Policy Committee have been meeting over the next couple of days. We are expecting an update from them any time now. That really is one of the reasons why there's so much lethargy from investors who are looking at the FTSE 100. They're really keen to have a look at those minutes and see what Andrew Bailey is going to say about these Brexit talks before the break for Christmas. Now, this time last week, a lot of people were expecting some sort of fresh stimulus into the British economy by the Bank of England. And that's because it did appear that we were definitely heading for a no-deal Brexit. Even if we are going to be heading for a no-deal exit, the fact that on Sunday evening, Ursula von der Leyen and British Prime Minister Boris Johnson released that joint statement saying that they were going to extend these talks really put a little bit of optimism. So we're not expecting there to be any change to already a really high quantitative easing programme, and of course these historically low interest rates, which currently stand at 0.1% here in the UK.
In company news now, telecoms giant TalkTalk has agreed a £1.1 billion takeover by shareholders of Tosca Fund and private equity investors Penta. Can you tell us more about this deal and what led to the takeover in the first place?
Well, what led to the takeover was that £1 billion offer, which was too good to be true, too good to let go for TalkTalk. We're still waiting for investors to formally accept the offer. But this discussion had been ongoing for the past couple of days. TalkTalk have about 4 million customers in the UK, and their main rivals are the BT Group and Sky. One of the levelling up projects that Boris Johnson has been talking about, especially when it comes to the north of England, is to really try and provide stronger broadband and greater connectivity over the next couple of months. And TalkTalk investors are really happy that this takeover will allow that to happen. Tosca Fund were already one of TalkTalk's main investors, and Penta is already very entrenched in knowledge in the sector. This announcement came this morning as TalkTalk briefed updaters on how investors on how they've been going over the past 6 months. Of course, COVID has ripped into many sectors. Communications, believe it or not, has also been one of them. They said that they've been hit by £9 million worth of COVID contingency plans. Profits have also fallen 13%. But look, you know, investors are pretty happy with this. And so are shareholders. As soon as they made this announcement this morning, their shares rose by 3% this year.
I'm sure these are certainly happy times for them. Thank you, Juliana. We'll see you again later.
Thank you.
Right, in Asia, shares were mostly higher today as investors reacted to the latest announcements from the U.S. Federal Reserve. Mainland Chinese stocks edged higher, with the Shanghai Composite up 0.63% and the Shenzhen Component advancing 0.729%. The Hang Seng Index in Hong Kong rose fractionally. However, South Korea's Kospi declined 0.57%. In Japan, the Nikkei 225 gained 0.14% and the Topix Index traded 0.27% higher. Shares in Australia jumped with the S&P ASX 200 up 1.07%. And U.S. stock futures were higher this morning as traders kept an eye on Washington, looking for clues about the prospects of additional fiscal aid. Dow Jones Industrial Average Futures gained 96 points. S&P 500 and Nasdaq 100 futures also traded in mildly positive territory. On Wednesday, congressional leaders closed on a $900 stimulus package that would include direct payments to individuals. However, the measure would exclude liability protections for businesses, as well as aid to state and local governments. All right, let's talk oil prices now. They hit a 9-month high in early trade today, and that came after government data showed a fall in U.S. crude stockpiles last week, while progress towards a U.S. fiscal stimulus deal and strong Asian demand also gave prices a lift. Brent crude futures were up to $51.53 a barrel in early trade, and U.S. WTI crude futures were also up almost 1% at $48.28 a barrel. Now, both benchmarks have hit their highest since early March. According to the Energy Information Administration, U.S. crude inventories fell by 3.1 million barrels in the week to December the 11th, more than analyst expectations of a 1.9 million barrel drop. We'll assess the impact of the border reopening on the Nigerian economy when we return in just a moment. Do stay with us. Welcome back. Nigeria's President Muhammadu Buhari has approved the immediate reopening of 4 major land borders in the country, which were shut in August last year. The Finance Minister, Zainab Ahmed, says while the 4 borders are to be immediately reopened, the ban on importation of rice, poultry and other banned products still subsists and will be implemented by the Border Patrol team. Meanwhile, Nigeria's galloping inflation currently at 14.89% and the contraction in trading sector GDP by 12.12% is being partially attributed to the closure of the Nigerian land borders. With the reopening of some of the borders, what will be the impact on an economy that's already in a recession? A research analyst at the financial derivatives company Mayowa Ige joins us now to provide answers to these questions. Good afternoon, Mayowa. There are currently mixed signals from different government agencies for a variety of reasons on whether to reopen or keep the borders closed. But what do you think will be the impact, both positive and negative, of the reopening of the borders on the economy?
Hello, BC. Thank you for having me. So the federal government implemented the border closure in a bid to curtail smuggling of arms, food and commodities into the country, and also to reduce illegal exporting of petroleum outside the country. And then they were also trying to boost local production. This was the reason for the border closure. And since the commencement of the border closure, we have seen commodity prices increase to an average of 50%, increased by an average of over 50%. And so with the opening of the border closure, some of the positive impact it will have on our economy will be that we will see an increase in supply of commodities, and this would lead to a drop in commodity prices, which will help our inflation. Hopefully, we will see a drop in inflation as a result of the increased supply of commodities and drop in commodity prices. And also, trading activities will pick up. We know that the trading sector contributes about 16% to our GDP. And so an increase in trading activities will help our GDP. And then quite a number of our manufacturers import their raw materials through the land borders. And this will make it easier for them to import raw materials. Also, they export their finished goods to neighboring countries through the land borders, which will be beneficial to the manufacturing sector. And also, with after beginning, it will be positive for us. Now, on the negative side, competition for our locally produced goods, we have capacity constraints, which will not help locally produced commodity prices, and also smuggling will continue if the necessary infrastructures have not been put in place already.
Now, policy benefits of the border closure include import substitution and self-sustainability. Some have said that it has actually increased agricultural production in the country. But do you believe that the border closure was a major boost towards domestic production?
To an extent, yes. With the border closure, we have seen increased production of certain commodities like rice, poultry, and then there's been a shift in demand to locally produced goods, and this has encouraged local farmers. And also with with government's intervention, there's been encouraging to the agricultural space to an extent. However, the impact has not been very significant because smuggling really didn't stop. It only became harder, and then the quantities of goods smuggled reduced. And also, when we look at the agricultural space, there are certain challenges that have constrain the level of output. We have flooding, insecurity, we have infrastructural challenges. So these have not really made the impact significant. So I would say that it's more than just border closure to increase local domestic production. There are challenges that need to be addressed first before production can pick up.
Perhaps talking about challenges now, the alternative to transporting marine cargoes across the border is for them to be shipped directly to Nigeria. But the average time for clearing a container at the Lome port is put at about 24 hours, while the alternative in Nigeria is about 15 days. Since this is one of the reasons for smuggling, how can Nigeria address this challenge? You have 1 minute.
So logistics is a huge cost. I wouldn't say that manufacturers go use the land borders and go through Lome because they are trying to smuggle goods. It's just more efficient for them. So in a bid to achieve cost efficiency and operational efficiency, they use the land borders. This is the major reason for using Lome and the land borders, not because they're trying to smuggle goods out of into the country. And so for the federal government, some of the things they can actually do is to make use of technology, a scheduling system to approve trucks into the port, and also to just make their processes more efficient. And also the railway will come in handy now. It will help reduce the traffic, the gridlock. And then also we need to improve our road, especially the road infrastructure around the ports. And then one other thing they can do is to make use of other ports in Calabar and Warri. The dredging needs to be done in Calabar to make it fully efficient. So some of these things should be implemented. I believe that when they're implemented, it would help reduce the inefficiency we currently manufacturers and importers currently experience using the Lagos ports.
Research analyst at the FDC, Mayowa Ige, thank you for your time this afternoon. To other stories now, the International Monetary Fund says the removal of Sudan from the U.S. list of state sponsors of terrorism eliminates one of the obstacles blocking debt relief for the country. According to the head of the IMF mission to Sudan, Carol Baker, Sudan still owes money to the IMF, the World Bank, and the African Development Bank, and cannot obtain new funds from these institutions until the settlement has been agreed upon. To reach a settlement, Ms. Baker explains that certain conditions, which includes a strong performance from the Sudanese authorities during an economic program monitored by experts from the IMF, must be met. It also requires support from the majority of donors, including the U.S., to settle debts with international financial institutions. Meantime, the International Finance Corporation and the American Chamber of Commerce in Egypt have signed a partnership agreement to help Egyptian companies create more flexible and inclusive workplaces. The partnership is part of a broader effort to support the country's private sector as it navigates the COVID-19 pandemic, while at the same time fostering and reinforcing equal opportunities for women in the workplace. And finally, Zimbabwe's central bank plans to unbundle its gold refining and printing units in two separate companies and sell a majority stake in the new gold refinery business to miners. The central bank governor says the bank will retain 40% shares in the new gold refining business and sell the balance to large-scale and small-scale gold miners. And that's our program today. Thank you for watching. I am Bisi Adebayo.